Hey everyone, Andy Moss here for trading-adventures.com, and it is the end of the trading week. We have a long weekend coming up to celebrate the July 4th Independence Day holiday here in the U.S. and America's 250th birthday. So a lot of festivities going on, and I'm going to go ahead and get through the weekly charts and take a look at the market action. We've seen the end of June, the end of the second quarter of the year. We're at the halfway mark, and there's been pretty eventful. So lots to go over on a bigger picture review here, even though the SPY put in an inside week. We've got the 4-week moving average, which is roughly equivalent to a 20-day. That's the red dotted line here. And the 10-week moving average, roughly equivalent to a 50-day. That's the dotted blue line here. And then here's the 40-week, which of course is roughly equivalent to a 200-day moving average. All of those are below. It's pretty orderly price action here. We've had a couple of dips lower that have been bought up pretty quickly, and this week we get an inside week. More consolidation as the shorter term moving averages come together. RSI is still pretty good. Volume a little light for the short week, not a surprise. Q's inside week as well, though they're a little flatter and a little nearer the bottom of the range and on this 10-week moving average here. So otherwise, the situation is pretty much the same. I'm going to skip ahead to IWM. It's an inside week above the rising 4-week moving average, and the outlier this week is the Dow Jones Industrial Average. New highs, solid buying all 4 days this week, and really very strong move after this consolidation period here. We watched for the breakout. It happened. And other than one brief dip here a few weeks ago, it has hardly looked back. Very solid, strong action there on the Dow 30. Bitcoin breached 60,000, still below the moving averages. Just really nothing to like here on Bitcoin. If we had to find a potential silver lining, maybe a bit of a positive RSI divergence up here as we make new lows on price, and RSI holds up a little bit. So we're getting maybe some early indication that the downward momentum is weakening a bit, but price action is the main focus, and it still looks horrendous. In the meantime, the dollar is breaking out and above this range that we've been watching on this chart for many years now. So that's a significant development there in the dollar. That breakout actually came last week. This week it rested and retested the area a bit, the rising 4-week moving average here. So we want to keep a close eye on the dollar to see how it progresses. Taking a look at volatility, not much going on there. It is still subdued and declining. The rest of the world holding in there. Another inside week. No major developments there. It is between or perhaps just below the still rising 10-week moving average, but still holding this breakout pretty well, although it has had some selling pressure here the last couple of weeks, and RSI is choppy and drifting back towards the center line, but nothing to be alarmed of there yet. But within that group, China still looks pretty miserable. Like the rest, inside week, but very near the bottom of the big drop of the previous 2 weeks. So nothing to be excited about there on China either. Bond markets just kind of chopping around, no different there. That was the AGG. Here is the TLT, 20-year treasuries, similar action. We're trying to hold up in here, but not running anywhere very quickly. High yield bonds, consolidations, lower highs and higher lows. After this one, we've got lower highs and higher lows as it continues to tighten here. The moving averages are coming together. It's right around this VWAP anchored to the April lows. And oil is almost all the way back down to pre-Iran conflict levels. Really selling off hard there over the last several weeks. Gold continues to drift lower. A couple of long lower shadows here on the last 2 weeks. So we've seen a little buying action come in here in consecutive weeks. If you're a gold bug, maybe that's a little encouraging, but much to be proven yet there still. Silver inside week, similar with the lower shadows here on the candles, but not as big. Looking ahead at growth versus value, still pointing towards value. So intermediate downtrend here for the last 6 or 7 weeks. Let's see, that's 5 or 6 weeks here. And moving in the direction of value, which, as we know, the reason we monitor that is potentially an indication that positioning is a little more defensive. We also have a positive RSI divergence here as we made a new temporary low last week. We'll see if that develops into anything more meaningful. That's just an early indication there of something to be on the lookout for. And staples versus discretionary, still not going anywhere, but just heavy. I'll just say it's heavy. It's tried to get up a couple times and it keeps falling back down. It's not running away to the downside, but in the intermediate term, the last several weeks, we do see favoritism towards the consumer staples as opposed to discretionary. So again, just possibly a slight hint that positioning is a little more defensive. High beta versus low volatility. We see a clear winner here over the last 2 weeks. Once again, investors, traders, positioners choosing to be more focused on stability than high beta growth names. And we see that also in the SOX, the semiconductor index. It looks very similar here. 2 solid weeks of selling down to the rising 40-week moving, 10-week moving average. And not broken by any stretch. Still a very strong move and a very orderly consolidation, but 2 weeks of selling nonetheless. On the other side, look at XBI. We talked about this consolidation several weeks ago, and the breakout happened, and then I even highlighted a brief update here to show the measured move price objective. Remember, we don't want to assign price targets higher, but that was an indication of, or just an area to say, hey, do we need to look at this a little closer, which I did, and it just continues to go. Biotech incredibly strong there after a couple or 3 months of really sideways consolidation, which followed many, many months of a bigger sideways consolidation there. So sometimes these moves take time to develop, but worth paying attention to. And similar to that, financials. This was another similar pattern we were looking at, kind of a bull flag here. I didn't copy the measured move objective over it. We're probably pretty close to that now. So yeah, we're just a few points, not even a half a point off of that. And again, that's not a price objective, that's not a target. It's just a technical pattern and a system of measuring. Say now the move's been pretty good. Let's pay close attention and see what happens next. We do have a previous high up here around $56.50 or so. And so we've got a couple of areas. If you're involved in financials, everything looks good, but you might pay a little closer attention here over the next couple of weeks. Software, not going down without a fight. Looked really pretty miserable last week and got a pretty big bounce this week. So it's not out of the woods. It's still stuck in this very wide, messy range. We still have a declining 40-week moving average, but this is more encouraging than the last 4 weeks we saw. And notice it went down very low last week, and this is that long lower shadow. We'd call this a doji candle. The open and close for the week was basically the same level, and it's got long upper and lower shadows. That tells you the price went down and was bought back up. So the buying actually started last week in the sector as a whole, and it got some continuation, this week, which is, somewhat encouraging. Mag 7 names also getting a bit of a bounce and getting out of the inside of last week's range back over the 40-week moving average. And again, no resolution here, but that is early encouragement there for the Mag 7 stocks as a group. Looking at the Mag 7 names individually, really big week for Apple. Last week, like many others, it looked pretty discouraging, and the price action improved dramatically. It's back above all the moving averages and back near all-time highs. As a matter of fact, this is from last week's low to this week's high, 13%. So that's a really strong move in Apple. Some of the others didn't fare quite as well, although we did see some bounces across the board. Amazon's still stuck in this range. It's got this area here. It's been a little bit of support and resistance, albeit kind of messy, but this is not out of the woods yet. Google, same bounce, but it's just above this anchor from the recent lows and right near the declining 4-week moving average, with the 10-week still overhead. Meta is still stuck below this trend line. Just can't really get anything going that will stick around. So lots of work to be done there for Meta bulls. Microsoft, a bounce here, but still looks really nasty. I mean, this move was really strong several weeks ago, and it just gave back the whole thing plus some. We had a lower low over here relative to this, and just really, really nasty looking price action on Microsoft right now. Nvidia can't get out of its own way, basically gone nowhere for almost a year now. Some back and forth, some moves higher that didn't hold, and it's right back once again testing its slightly rising 40-week moving average. And Tesla got off to a pretty solid start for the week, and it just kind of fell on its face today. Let's see, most of that, yeah. Here's the daily time frame on Tesla, and this is today's action. Just really disgusting there for Tesla, and discouraging to not be able to see it hold these higher levels up in the 430s. So that's what's going on in the Mag 7 names individually. Looking at breadth, strong, no concerns. The percentage of S&P 500 stocks above a 50 and 200-day moving average is rising and healthy, and really nothing to be gleaned from that other than there is good participation beneath the surface there. And I can show you another, I think we'll skip the bullish percents this week, but I'll show you another view on that. Here's the equal weight S&P, new highs. Equal weight NASDAQ, that's a new closing high there. So a little choppy up here, but the smaller stocks are participating. The equal weight indices are participating, and that is a good sign, market breadth and participation overall. So the standouts, of course, biotechs and financials, and that tells us that there's rotation. Buying pressure has not disappeared completely. The same macro sectors, or bigger sectors, if you will, like the mags and the semis, they've been seeing some continued weakness in the mags on several names, and semiconductors taking a little bit of a rest. Not disastrous, not broken. We're just seeing some rotation beneath the surface here. To zoom in a little closer and look at the roadmap charts, here's the index ETFs on 30-minute time frame. S&P was able to bounce a little bit and remain above a rising 5-day moving average, but the Qs were not able to do that. Very weak action here in the Qs today. They are below a declining 5-day. The IWM is below a declining 5-day. Only the Dow continues to go up consistently and strongly. Higher highs, higher lows, above a rising 5-day moving average. Another show there of buying rotation. One thing we didn't look at was, let's just pull it up here, healthcare. Healthcare is traditionally considered a more defensive sector. So there is another notch showing that positioning is just, I don't want to say it's cautious, but it's more defensive. We could draw in perhaps a large cup and handle type pattern here, but this is a very big move in healthcare last week with good follow through and a breakout this week. So that's encouraging there. And then what about utilities? Utilities are pretty strong. They haven't run away, but this consolidating action is creeping higher above the moving averages. So just defensive rotation, or buying is shifting from the more speculative areas of the market to the more conservative, more cautious areas of the market. And that's really about it. Next week, we have taken a look at the calendar here. We got some, let's see, that's today. And we don't see anything incredibly earth-shattering or potentially market moving. We do have some more jobless claims next week. I think maybe, yeah, there's some Fed speakers and that kind of stuff, but nothing. We get the Fed's balance sheet, if you watch that at all. I do not. And FOMC minutes. So those are the things I was thinking of on the calendar. Maybe it shakes things up a little bit. I wouldn't worry about it too much. But that's a look at the market for the holiday shortened week as we head into the 4th of July, America 250. We've got the USA, Team USA winning in the world. Lots of good things happening. So if you're celebrating, I hope you have a safe, wonderful, enjoyable weekend. And we'll be back next week with continued look at the price action and see how the charts develop. Have a great weekend, everyone.